Ladies and gentlemen of the crypto space, we're live on a Wednesday, February 16th at 11:38 a.m. A little late to the stream, but we're going to get this party started. We're going to hit some macro talk today. We're going to understand where crypto fits into this whole macro shit show that's going on and what does it all mean? I mean, obviously, we have opportunities in the crypto space that you can't simply entertain in legacy finance. We have a capacity for risk management. We have a capacity to structure very meaningfully crafted portfolios that have risk consideration expressed, where you have your relatively risk minimized positions, and then we know how to hedge. We know how to do things the way anyone in traditional finance knows how to do it. We're just deploying it in a crypto centric fashion. And you guys know the deal. I always talk about hedging outside of the scope of the crypto space as well. We're not going to get into that territory today because you all are here for the crypto space. Macro crypto sit rep, offensive defensiveness. I mean, you got to remember, let's pop it over to the main screen, that we're talking about defensive, like risk minimized. Like the risk off position in the crypto space is cranking out greater returns than hedge funds do. I mean, if you get 15% on dollars, hedge funds work an entire year doing all sorts of fancy structured positions where you long this and short that, beta neutral and whatever, and they're cranking out like 5-6% returns on their capital. And you crank out 15% on stable coins in a stablecoin LP position. Dare we entertain like auto compounding functionality where you're just literally rent seeking and extracting value from treasury emissions of whatever governance protocol is incentivizing liquidity for an LP position. I mean, like a beefy is just, you extract 30, 40, 50, 60% returns on stable coins. And it's a stable coin position. That's what we think about here. Where are we in the macro financial situation? The dollar is basically treading water in a precarious region. I mean, it could take some time, but you got a golden cross if the 50 SMA crosses the 200 SMA on the weekly, but that's a couple of weeks out given the differential between where those moving averages lay on the chart. Let's look at the daily. So obviously we had a golden cross back in the middle of last year, somewhat last year. There was some weakness in the 50 SMA with the 100 SMA, still with an upward slope, but it looks like there is weakness with a bit of a head and shoulders presentation. So obviously a contradiction between the weekly and the daily, which means basically you're treading water for a period of time until more of the trend emerges. I mean, you could clearly have a rip up to like 96 or so, and you create another shoulder here, and then you got a pretty decent head and shoulders formation now on the weekly. But this is a couple weeks out, a month or two out. You can see that kind of trend formation be created. It'd be interesting to see what plays out. I mean, we're just in a macro crossroads. Dollar rips to the upside. That's going to put some serious pressure on foreign currencies, which is going to weaken their currency, their relative respective purchasing power, which is going to decrease their capacity to repair and strengthen the supply chain, which has been entirely exported from the continent of the United States, which means we're only going to exacerbate or agonize consumer price inflation by putting pressure on supply chain rehabilitation, so on and so forth. So I think raising rates is going to just make inflation, consumer price inflation, worse. I don't think it doesn't make any sense to me that it's going to resolve supply chain complexities at all. Clearly, it'll decrease the propensity for persons to spend money, and that's the whole point of increasing rates. It's really designed to decrease velocity, decrease lending, higher rates, less interest in credit because of the higher rates, so less capital expansion, which is less velocity. But that's not the side of the supply demand that it has been the biggest burden. It's more so the supply side. So let's take a look at 10 years, right smack in the middle of the curve. So 10 years are still screaming sales, and there's powerful short positions that are propping up yields. So you can see this thing wildly swing in the opposite direction, but this is coming off a massive inverse head and shoulders on the monthly on the 10-year. Inverse head and shoulders, cup and handle, whatever you want to call it. This thing it broke in the right direction. above the shoulders, obviously above the neckline, and the, uh, if it swings in the opposite direction, you get a short blowout, and there's just a huge amount of buying on bonds. You can see this thing absolutely ripped to the downside. I mean, there we go out to the yearly. You can see the trend. The trend is obviously we're going to slam into 0%. It's going to 0%. Uh, that's just where it's going, and that'd be extraordinary if we saw it down at zero. That would just be a blowout on yields. Um, and you know, you hear Stephen Van Meter and Jeff Schneider and their talk, and I agree with all of that. The directionality is towards deflationary, crushing pressure on the entire system, um, and that's really an overtone that overshadows, and it's just always in the background, reminding us you should have fear over these markets. They keep a deflationary system inflated using artificial intervention, and that's the state of the macroeconomic system. Right now, we have definitely a transitory bear market rally. Things look bullish in the crypto space. Gold looks like it's ready to rip, so there's just contradictory information all over the place. But let's go over to S&P futures real quick. Let's take a look at that. And we'll talk a little bit of crypto. So I don't know. I could give a shit about this stuff. I mean, this thing, it looks like it's dangling from the top of a skyscraper. Uh, I want to go out to the yearly. Let's go over to the weekly. I mean, it's sitting on the 50 SMA. It's just slow and boring, and I don't know. This thing could roll over. Clearly, we have a 50 SMA cross of the TWAP on the weekly. Let's go back to the monthly. We're sitting on the TWAP. It literally was TWAP support, and now we're trying to barely hold on to 50 SMA support. There's fair amount of price action support above the TWAP, so we'll get all these levels. I think it'll be very interesting to see this price action historic resistance turn into support, converging with the 50 SMA on the monthly. Do you realize that's a bullish thing, meaning it's depreciation. That's by definition bullish depreciation, or because a resistance flip support is one of the most incredible technical indicators that indicates uh, extreme bullishness. So you get the resistance flip support, but then you would need the higher high. This is just an incredibly potentially turning into one of the most historic volatile charts, because I always talk about a resistance flip support and then the higher high. So if you hit this, that's just rocket takeoff territory. And we see this pattern all across the crypto space because we get this kind of volatility. We get the 50, 60% retraces. We get those types of drawdowns. So we see massive, massive resistance flip support and then the print of the higher high, and then it just rockets off, 1, 2, 3, 4, 500%. And that's not something you see in legacy finance, and certainly not in the indexes. We've seen extreme volatility with PayPal and some Facebook of late. And in fact, Facebook is printing exactly what I'm talking about here. So we'll take a look at that real quick. Oh no, it broke down. All right, this looks like shit. I take it back. So there was a point where it was holding above the historic resistance. So horizontal line. I mean, it still is there, I guess. You want to see something like that. Print, print the line, print the line. Let's print the line so you guys can see it. So if it held, above 218.97, that would have been more reassuring. This is a weaker price action support. This would have been even a stronger price action support up here at 224. But I don't know who plays this stuff. I mean, when you see a blowout of a moving average, I mean, you're talking about 200 SMA on the weekly, and then previous supports just completely crushed in a single weekly candle. Just completely crushed. All this price action completely wiped out. All of this fighting over here where these supports were created, and it was just completely blown out of the water. This chart screams weakness. Always remember that there's three primary things to look at in charts. You got support. Holding support is an expression of weakness. You got resistance flip support, which is an expression of strength, and then you got resistance held as resistance, which is basically GTFO. Let's get the heck out of there. So weakness is not a good sign, and this is a situation of weakness where support failed. Supports are failing. We haven't had the retest to the upside yet. So when you see something like this, oh, that's a get the heck out situation. That's sell the failed route. That's dead cat bounce. That's a dead cat bounce right there, boys and girls. Hunter Eads in the house. Raul's in the house. Risky Crypto Talman, my man. Crypto Bets, Mario, a pleasure. Crypto, have you looked into the Animal Farm? The same trusted dev who built Drip Network. No opinion on BSC. It's completely off my radar. Soon I'm on time this morning. A pleasure, a pleasure. Holding the governance asset gives you access to platform fees and deposit fees. The BUSD vault is visible and pays you daily. Yeah, there's 1,001 good platforms. It's extremely hard to find uh, meaningful uh, allocations. And you want to concentrate. You don't want an excessively diverse portfolio. I mean, listen, this might be your one extreme high conviction position. I don't know. Everyone's going to have their subjective interpretation of what is a good position to have conviction on. Um, and for me, it's older protocols and larger protocols and stuff that's tried and tested. Curve, convex, stuff like that, Frax. Those are the only places I would allocate a good part of the portfolio to. Now you can throw around 0.1%, 1% of a portfolio in, hopefully getting 10x on your capital. And there's a lot of that stuff all over the place in the crypto space. But bear in mind, 10x is going to get sold, and it's going to get sold hard. And anything that goes up like that, and there's a perfect setup right here, right now in IB, Iron Bank. Uh, this could easily have been a painted tape, but from a technical standpoint, this is a historic resistance flip support. It's a brand new asset. It came out shortly ago, but there's a heck of a narrative with the protocol, so it's technologically meaningful. It's real technology, and it's going to be consumed. But from a classic chart setup standpoint, this screams it's going to get run up by late entrants and smaller persons that don't look at technicals and don't understand like a macro perspective on the crypto space and really what's going on. So when Solidly launches their incentives, which Iron Bank got 13.5% of all Solidly incentives are going to go to IB FTM, that LP position. So that's going to drive liquidity because they're going to be throwing around hundreds of percent return on that LP position, which are going to dry up. They'll be diluted, obviously, and that's just the way the system works. But that's going to drive a huge amount of capital to flow into those LP positions, which is going to drive up the price of Iron Bank, of IB. And then what happens? All the persons that have it down at 20, $30 that just got 10, 15, 20x on their money, they're going to sell, and they have large quantities. So you'll probably see this thing go into three, four, $500 range, six, seven, eight. Maybe you get a 10x out of this bad boy. But then you can have a massive sale from persons that have thousands. They have thousands, and it's going to get sold, and people are going to make a couple 100,000, a couple million off this bad boy. And that doesn't mean it's a bad asset in any regard. It's just survival, Darwin, and stuff like that, natural selection. Um, so I look forward to, for this asset, selling a massive rally and watching the fallout and watching for the bottom and to gain a position at a reasonable market price after I see the large sell orders of, two, three, four, 500,000. And I watch for stabilization. You find a bottom, and then I take a position. This is the type of asset now, not considering its history, but now considering its speculative integration as a liquidity source for structured products on Solidly. This is a position I want, but I know what's going to happen in the short term. I have the strategy, I have the plan, and I know where I want it to be long term. So I'm going to look for that big rip to the downside, and I'll obviously participate in that big rip to the downside. And then I'll look for that bottoming pattern, maybe a historic resistance, flip support. Maybe it falls down to here. Maybe it falls down to here. That's $300 right there. So watch. Maybe we see a big rip to 1,000 and then it just crashes down to 300. And that's a historic resistance flip support. And maybe you see a nice week long base build on this historic resistance. And that's indicative of a decent entry. Maybe you'll see a wick down to 240 and a weekly close with the candle body close on the 4 hour above this historic resistance. And I wouldn't buy wicks down. That's more of a risk on someone trying to extract maximum returns. I don't buy wicks down. I would wait for the trend setup to establish that the market in general is starting to accept this is a new support level, and that's where I take a position. And I'm very interested in IB returns. I'm expecting very meaningful returns on IB based on the amount of IB they're going to have in the LB position. So it's going to generate a fair amount of swap revenue. And also, uh, the platform is going to generate a huge amount of fees if it's a source of collateral for structured products on Solidly. So that's what I want exposure to, but that's not what's going to happen in the short term. In the short term, this is going to get totally abused, in the worst of ways that assets get abused, especially nascent and new assets. Um, it's just is what it is, and this is a free market. And the difference on how the only edge you have in these free markets is to have knowledge and experience and listen to persons that have experience. Um, Bet my bottom dollar that that's what plays out. In fact, I wouldn't bet my bottom dollar. I bet a position. I have a position. This is a nice base on a historic resistance. I'm going to watch for the rip to the upside, catch a 10x, and then look for the bottom so I could have a long-term exposure to the protocol and the revenue stream it generates. Um, Always maintain rational position sizes and don't overexpose yourself just in case a narrative is invalidated. Upon invalidation of a narrative, positions always are to be exited. Um, where were we? Crypto bets is everything. It's everything you want and ask for. By the way, Drip Network is the best play in DeFi. So there's plenty of plays in DeFi, my friend. Don't say something is the best. Playing hand over fist during this entire market correction. Deflationary asset, just incredible. Never been done. Yeah, there's a I appreciate the exuberance. There's a lot of things that have never been done that are building out. I'm getting a kick out of a lot of the things Mashinsky is partnering with. My propensity is to allocate capital to protocols in the crypto space that mirror legacy financial structures. And the biggest thing that catches my fancy is crypto eurodollars. I mean, the eurodollar does what it does. It plays a systemic role in global currency supply, synthetic dollars, and they built protocols that create synthetic dollars based on dollar-denominated collateral deposits. It, by definition, is a eurodollar. I find that just absolutely tantalizing from a 5 to 10 year standpoint. So that, and I have a very long term time horizon, and I that's the time frame in which I operate in, and those are the protocols which I want exposure to, and I don't need to get necessarily out of my comfort zone, and on occasion I do. Like this is out of my comfort zone, knowing what's going to play out when two, three, 400% as applied to the solidly LP position. It's going to rip to the upside. It's going to drive liquidity in, and this is a trade, and I don't like doing that. I know what it is. I've described to you the psychology of a buy low, sell high methodology, and it's predator. It's a person that was in early, sees that a condition where a huge amount of liquidity will flow into an asset and is going to capitalize being early on persons that were late. And, that's just is what it is. So this is probably the closest thing I'll get to being outside of my comfort zone in the vast majority. I've 30, 40% stablecoins at the moment, cranking out 10, 15, 20% returns. Stablecoins. I mean, that's exactly what I just talked about with crypto euro dollars. Stablecoins are the biggest thing in the crypto space. And folks glance over them because it doesn't produce 1,000% return on the money. It's not giving you 10x's. But 15% return on your money in this macroeconomic environment where traditional financial, even structured products give you jack shit. Get nothing from derivatives, nothing from REITs, zero. It's worthless. You know, There's nothing entertaining or interesting about traditional financial products. But when you could get 15% return on stablecoins, synthetic dollars, merely by providing liquidity to crypto forex markets where people are trading between different synthetic dollars and you're capturing swap fees, transaction fees, that's an enterprise. I just, and it's so simple. And I'm a big advocate of simplicity and not trying to understand sophisticated tokenomics, of which I appreciate as well. There's plenty of tokenomics and plenty of protocols that I find tantalizing, including my own stablecoin protocol that I've shared with you guys. But GMX has great tokenomics, and the E33 is ridiculous tokenomics, and Frax is on another level. But bear in mind, it's also a synthetic dollar. So you can't spread too thin. You can't go all in. Just follow the rules. And just because I don't necessarily have interest in something like crypto bets and drip, that doesn't mean it's not necessarily a bad thing. The whole point of the stream is to express to you guys due diligence, rationality, logic, reason, rules, and best practices. I sound like a software engineer. Best practices. Follow the rules and respect the portfolio. Respect your goals, have reasonable, rational time horizons and expectations. The number one thing that screws everyone up with capital allocation is trying to make money. That's not how making money works. Making money works by managing your money and managing risk. And it's not about 51%. If 51% of the time you win versus lose, you're going to grow a portfolio. I don't like that. The analogy I prefer the most is placing yourself on the tracks and letting the train come to you. Stuff like that. You want to get ahead, and the only way to get ahead of a narrative is to truly understand the technology at play. And the way I understand the technology at play is in context of traditional finance. I see these systems and I know what they are. I don't need someone to tell me what they are. I know I'm looking at crypto euro dollars. I know I'm looking at synthetic dollars because it's identical. Period. I know I'm looking at forex markets because that's what it is. I know I'm looking at money markets because it's the same thing. I know I'm looking at structured product protocols that have options with integrated long leverage and beta neutral and all this fancy structured products that we have in traditional finance, but it's in the crypto space. And if like with GLP, where you're literally lending collateral to facilitate, levered options positions, which are automatically liquidated. That's completely automated. And so that means the collateral is safe. It'll get liquidated into highly liquid markets. Um, you have a known behavior, and you know the operating parameters of the position. GLP is basically a manifestation of P&L for the protocol. As the profit of the protocol goes down, GLP goes down a little bit, profit goes up. It's a very stable price point. It's not a stable coin, but it goes down a penny, goes down 2, 3, 4 pennies, goes up 2, 3, 4 pennies. It's relatively stable. It's very slow price movement, but it's producing 100% return on the money on Avalanche and like 40% return on the money on Arbitrum. And it's denominated in Ethereum and AVAX and GMX, which then you got the tokenomics that to be considered. So there's a whole lot of stuff to consider. Information overload. Folks try too hard. Take a step back. There's nothing wrong with going into stables and just cranking out 15% return on your money. Folks try and make money, and that often results in contrarian results. Lewis is in the house. Iron Bank protocol to protocol lending and liquidity. Any thoughts on purely based on that use case? It's a massive use case. The history of Cream and the future of Iron Bank, whatever. I'm quite interested in Solidity's consumption of Iron Bank for its leverage positions. And we all know how Andre works. We all know how structured products work in the crypto space with completely automated liquidation processes into highly liquid markets that are often owned by the protocols themselves. So we're dealing with relatively risk minimized collateral lending positions um, with relatively stable price points, as well expressed by GLP. on GMX. So that's what I'm looking forward to. I think Iron Bank provides solidly with GMX-like functionality, as shown with the GLP asset. It's not there. Solidly doesn't even have emissions yet. This asset is going to rip to the upside when 300% is applied to the IB um, FTM LP position. And then these people down here are going to make 1,000% of the money or 2,000% of the money. And it's going to come crashing down. And that's the way it's going to work because that's the way humans behave in the most predictable of ways. We've seen this with Spell. We've seen this with countless assets over the years. You have a massive initial run up. And in many regards, even if you look at the Bitcoin chart, you see that type of behavior. Massive run up where exuberance is sold by the persons that were early. And then and that's the smart money. The smart money is bought early, sell at the top, and they buy when the shit rips to the bottom. That's the direction of things. But I look forward to having this as a long-term position. I wouldn't mind seeing this rip to 1,000 and crash back down to 148, and I'll rebuy at 148. So 1,000 rebuy on one of these resistance levels. Bear in mind that bottoms are impossible and tops are impossible to find. So grab a couple X, grab 2, 3, 4, 5X on the money, and then buy when it crashes 80%. And then just sit back and relax and let everyone else freak out about price action, freak out about all this stuff. Follow the narrative. If if a narrative persists and is not invalidated, that's all that matters. Check back and make sure that the narrative is still valid. If the narrative isn't validated, if it's failing as a protocol, liquidity is drying up, or it's not generating meaningful revenue, or it's not going to be used in solidly as a source of liquidity for their leveraged options positions, then the narrative is invalidated. And if that's invalidated, that's when you reallocate to another position. So there's a lot that goes into a well-structured portfolio, and a lot more than I could surmise in mere 30 minutes. Assume, what site is that to get 60% on stables? I mean, this is a great site, but bear in mind, it's not easy, guys. Uh, People think it's easy, like, oh, I'm going to get 60% stables, but you got to understand where the capital comes from and what kind of risks are involved. Like, this is pretty cool. 31% base rate. Wow. Talk about swap rate. So that's MIM USDC with a 31%. But bear in mind, it's volatile. It was 6% last week. This ProtoFi is still cranking out incentivized returns. Never caught my fancy. I don't like to be early. I wish there was liquidity in the Bancor pools. Bancor is 2017 tech. It's old school. But it's cranking out incentivized returns, and their monetary policy is ridiculous. It has an extraordinary balanced inflationary and deflationary component. It's full on MMT. I mean, it's really extraordinary. And their Bancor V3, I'm very much looking forward to actually having space in these pools so they could get capital in there. Just 27% on stables. It's printing. And it prints it in BNT, which is the volatile asset. And if BNT follows the Bancor narrative over years, that's what you want. I mean, at $2 and change, this thing was 40 cents in 2020. Come on, you follow this in 5 years and it's at $10, and you get 27% return on stablecoin deposits. That's that is the most insane position I could think of. Traditional finance would have a hard time processing that. Getting 27% on dollars, the yield is denominated in an asset that has appreciated 500% in the last 2 years. And clearly it ripped to $7, $8. And now it's down to 2 and change. So it's down 75%. But that doesn't mean shit when you were 40 cents 2 years ago and you're 250 today. That's what counts. You're going to see rips to 15, 20, 30, 40, $50 in 2025. And you'll see crashes down to $15. It's just, this is the space. Once you are able to process the volatility and the psychology that goes into the volatility, you see the exuberance. It's so predictable. You see the new persons that think it's easy money, and it's not about capitalizing on them, but you do. And then you end up getting back in. at an opportune time, to own the protocol, to own the technology, to own the revenue streams. And that's some serious shit. That's serious shit right there. JL, hey Noah, keep up the great work. Thank you very much. I appreciate that. I appreciate that. Mick Mon, can you explain VAMM? What are pools such as? I don't know. I'm not familiar with Tarot. I haven't played too much with it. Hasn't caught my fancy yet. My and cheap and Chi Dao is what catches my fancy as a crypto synthetic dollar, crypto euro dollar, and what's that protocol uh, that there's a couple of them, obviously. You got Frax is a great synthetic dollar, and MIM is still on the table. And I think it's in 6 month time, no one will remember who Sifu is. And well, there's a bunch, but there's the better ones. An FPI airdrop is coming up, which is pretty cool. So I look forward to that. Deeply confused. You're very pleased today. I am pleased as well. JL, what do you think of the economy society look like in 2030? Well, Europe's going and the WEF is going to push for full-on MMT across the board. There's only one reason they want CBDCs. That's full-on capital controls. They want a capacity to control inflation by having an ability to actually do transfer payments, bypass dilapidated deprecated legacy banking rails and actually give people money, like real money, central bank money, actual currency, not reserves and manifested bullshit quantitative easing that doesn't really get money into circulation. And it's such a disinflationary system. It's so extraordinary hearing how Jeff and Stephen talk and really understanding it and understanding the discrete application of the word inflation and inflation. You can't just say inflation. You can't just say deflation. It's so applicable to every individual thing. And global currency is just so extraordinarily disinflationary. That's one of the biggest burdens on the entire global system. And consumer price inflation is just very loosely coupled to overall large scale macro factors. And that's why we look at the macro factors to get a little insight into the way things are going to head. I mean, seriously, take a look at this. I know I'm going back to macro. What do you think happens when the 10-year yields rip to the 10 SMA on the yearly, which is exactly why I have this line up? When is the last time the 10 SMA has been breached? It was breached back in 18. It was breached briefly back in 06. Brief breaches and tech bubble territory, pre-GFC 06, maybe a foreshadow of volatility to come, 95, and that was it. So these yields, this trend to the upside has been breached a few times. So you get a big sell-off. It's going to cause the entire global economy to convulse. And what's going to happen there? The equities markets are going to shit themselves. Bond yields are going to go to freaking zero. And bonds are going to be bought hand over fist as traditional risk off. So what's going to happen? So the bond play is still valid. And the higher the yields go, the more inevitable the bond play becomes. Frankly, in my opinion, it's a boring ass play, but that's okay. I think I'll do much better in the crypto space, and that's just my opinion. That's just what a lot of people know. They know the bond play, they see the inevitability, but I also see that in the crypto space, and I manage the capital well. I mean, I'm sitting on 50x, so I'm okay. I'm okay playing this system that I understand. About a 50x since 2020. I'm pretty sure that beats hedge funds at 5, 10, 15%. So that's an interesting one. 50 people in the stream, 24 likes. We can do better. Deeply confused. Any thoughts on UST and the Anchor protocol? Very interesting. I 20% for on UST positions. A lot of people have conflicting opinions about Terra. I hope it does well. It's not something I expose myself to. I am more comfortable with Tether than I am Terra. Certainly comfortable with Abracadabra. The spell asset is mutually exclusive or independent of what the protocol does as a CDP stablecoin. It's a euro dollar. So I'm more comfortable with MIM. in many regards than UST. So I give them credit, big credit. Do Kwon, that's some serious tech. That's the closest thing that's currently deployed that is comparable to what I envision for a superior stablecoin protocol that I put into my Medium article. So it's pretty cool. He doesn't control the peg, and that's what no stablecoin does, and that's what my protocol is designed to do. Own the peg. I mean, literally have a capacity to balance the peg under all conditions. And that's power. If you could pretty much guarantee, ensure that your stablecoin is $1 under all extremities of market conditions, that's a position of power. And that creates lendiness. That creates trust. So one day maybe I'll get to creating something like that. JL also heads up if you didn't see it, Tetus swap just creates synthetic lock key as a convex curve. Very cool. Yay. I like it. I look forward to it being consumed with Celsius obviously seeing Chi what it is. It's a big deal. The whole world, the whole traditional finance is going to want synthetic crypto dollars because euro dollars suck. As we see in Jeff's charts, they have failed to keep up with inflation needs. There isn't enough supply, and that puts pressure on the dollar upward, and that puts pressure on foreign fiat downward, which weakens other countries, which and this all goes back to like Brent Johnson and dollar milkshake. There isn't enough dollars, so supply and demand, dollars are going to eventually go to the moon. So bear in mind that's exactly why Russia and China are doing what they're doing and starting to price things not in dollars. All these deals lately, they want to de-dollarize. They want to be free of this dollar burden because there isn't enough supply. Um, Quite fascinating how geopolitics overlaps with macro financials and plays into micro financials, which is a lot of our conversation, but I pull in the macro financials. I hope it helps, guys. Hey, Captain, what do you think about Curve V2? Big deal stuff. That's big deal stuff. Let's take a look at the Curve chart. I haven't looked at it in a while. Yeah, Curve on the monthly still looks ridiculously solid on the monthly. You got to remember, everything I've ever said about Curve is still the case. It's a hyperinflationary asset that's net deflationary. That's crazy. That's like I would at some point in the future, if unless the narrative is invalidated, this is going to be a studied protocol for how it achieved this synergy with other protocols. I mean, in many regards, it's like a dollar because the dollar just increases in supply constantly, but there's an ever present deflationary force on availability, which drives up the price, which is exactly the same thing at play here. But we have protocols, software protocols that are programmed to just buy Curve and only buy Curve because it's an MMT currency producer, much like the dollar. And because of that, there's an ever decreasing supply of Curve, and people buy Curve. Why? Because that controls where the dollars, where Curve gets printed to, where the incentives get deployed, where the transfer payments are deployed. So, and it makes sense. And frankly, the success of the protocol in hindsight makes sense from a traditional financial perspective as well. It took the foreign nations, the protocols, the stuff that like convex, which dominated Curve, but how many people are trying to dominate convex? It took the dependency nations to get involved to suck the circulating supply to make it basic. This has all the hallmarks of a reserve currency, just the insatiable demand, and it's really remarkable in that regard. I'm not allocated. I don't have a position in Curve. I think I can outperform it. The tokenomics suggests that it has appreciative directionality. I mean, this is just a remarkable chart from the monthly perspective. It looks great from a monthly perspective. I don't expect it to appreciate significantly. There's just a huge amount of liquidity. There's no reason it wouldn't go up over time. 7, 8, 9, 8, 7, 6, 6, 7, 8, 9, 10. 10987, the directionality is very clear when you look at it in the longer term chart. relatively new protocol, so we don't have that 5, 10 year time horizon to really get big perspective. It just looks wonderful. It's a bit of a bearish perspective or presentation on the short term, getting rejected on the 50 SMA, 200 SMA. It's the 200. That's the 50. That's the 10. That's the 10 SMA, the TWAP, and the 200 SMA. That's a heck of a moving average and convergence. And bear in mind, we do have this price action zone of congestion, so we could see this fall down. I expect it to fall down. I mean, this is shaping up to be somewhat of a head and shoulders, albeit it's coming off a big dip, so maybe a head and a shoulder. Who knows? But it doesn't look good. It looks like it's going to head down in the short term, but directionally, when you look at it on the monthly, you check back in a year. There is much more likely than less you're going to have an appreciated price point. The problem is that presents the complexity of opportunity costs. What can you do between now and that year? What kind of appreciation is expected on a 1, 2, 3, 4, 5 year time horizon? And what could you do between 1, 2, 3, 4, 5 years from now? Can you outperform it? So there's a whole host of complexities in optimally managing a portfolio with regard to time horizon, opportunity cost, and capitalizing on transitory opportunities. That's the deal. Tapsy, I enter this world a simple man. Following your tweets, I'm morphing into a confused simple man. But I'll keep talking, and maybe one day I will help the right person, and I'll be able to give back. And this is all I could do to give back. Daniel, looking at that FB chart makes me never want to hear a boomer tell me crypto is too volatile again. That's right. There's nothing wrong with this volatility, boys and girls. Anytime anyone anywhere tells you the crypto space is volatile, yes, it's volatile. Figure it out. Understand why it's volatile. Understand the psychology at play and navigate this shit like a sailor in a storm. That's how you get ahead. That's how you win at this very Darwin system. How do you earn revenue with IB? It doesn't earn revenue. Yeah, Jacob, did you buy IB token or provide liquidity? I don't provide liquidity. I look forward to the LP position filling because I'm going to use it as exit liquidity. Vasco, 41 watching, 16 likes, 49 now, 28 likes. We can do better. Thank you, Vasco. Hilda's in the house. Always a pleasure. Catched it late today. Happy to see y'all here. Good crew in the house. Charlie's in the house. My man. Always good to see you. Hazim? Hey, Noah, do you very knowledgeable in the finance industry? Where does my experience come from? Well, I'm a software engineer, mobile engineer for the last 12 years, Android platform. So I have a classical education in electrical engineering. But financials, I did this all myself. Google and Real Vision. Big deal. It's a big deal. You want to follow Raul, Brent, George, Lynn Alden, George Gammon, Brent Johnson, Raul Powell, Real Vision crew. It's big stuff. Luke Roman, big stuff. Steve Van Meter, Jeff Schneider, big stuff. Play it back. Listen to those names. That's where all my knowledge comes from. I handle the long term, uh, you know, uh, systemic trend, the big cyclicals, Raul perspective. Luke gives me great insight into how the Fed is screwed. And you follow like Stephen and Jeff, and you understand that the whole system is just deflationary, crushed system. So deflationary. Like all this debt just wants to completely implode at any given time. It's like a time bomb. And all the Fed does is prop it up with games and smoke and mirrors and psychology and psyops and jawboning. It's extraordinary. But we're prepared because the dollar will be a dollar when the system crushes and the only thing left with value is dollars and bonds, or if the system hyperinflates and you get 15, 20, 30, 40, 50% on your money, and you got exposure with a properly structured portfolio to hyperinflationary resistant assets like Bitcoin, which is not an inflation resistant asset, it's a hyperinflationary resistant asset. But we have exposure to inflation resistant assets because we have assets that are enterprise. And what outperforms in an inflationary environment? Enterprise, because liquidity increases, therefore consumption of protocols, and therefore business and cash flow. And if you tap cash flow of enterprise, that is true inflation protection. Enterprise. So we know where the hyperinflationary protection is, gold, Bitcoin, so on and so forth. And we know where the inflation protection is, and we're also deflation protective because we know the system is always deflationary. And if we look at the bond cycle, it's also destiny. It has destiny written all over it. Lewis, it's all good, my friend. I'm happy to answer anything on your mind at any time. Listening to you speak, I realize how much I miss you, brother. Charlie, it's a pleasure. I've been doing this all this time, and I will keep doing it until I can help every single human on this planet unfuck themselves from legacy finance. Do you have any thoughts on Deuce? No idea what it is, my friend. Don't mean tarot. I mean to ask, what do pools on Solidly start with? I don't know. That's just a ticker symbol, my friend. Just a ticker. Hey, all, did Cap talk about Solidly yet? I look forward to Solidly. It's live. Emissions start, I believe, tomorrow. Uh, Protocols that had NFTs are going to vote to incentivize their LPs and drive deep liquidity. I expect billions of dollars to flow into this protocol. It's just what's going to happen when you have 400% incentives on LP positions. The capital is going to flow in. We've seen it time and time again. So now the interesting thing is, how are the VE33 tokenomics going to hold up? Because as more solid, or whatever the token is going to be, is emitted and locked, you get reduced emissions. So it's going to be quite interesting because obviously, as more capital flows into LP positions, that dilutes the yield. But as the price point of the emissions asset increase, that increases the yield, dollar denominated nominally, of course. So you could very well see high sustainability for incentivized returns. It was always a speculative result of uh, disinflation or deflation on price point. And that's exactly why we see 50% returns on convex for CVX CRV. Price point has gone up. And what if it goes 10x? If the price of CVX goes 10x and the price of CRV goes 10x, the returns, the incentivized returns on CVX CRV are going to go through the roof, which is going to further drive liquidity or capital allocation to that position. So the same thing will happen with Solidly, speculatively, albeit with novel tokenomics. VE33 is novel tokenomics. I think it's all a red herring. I have no interest in the Solidly asset, and I have little to no interest in the protocols that have the governance NFTs. Um, my primary interest actually nowadays is my stablecoins. I just think they're the biggest thing in the crypto space. I just think they're glanced over. I don't think folks understand them for what they really are. Mickmon, you were wonderful about solidly play. You were wondering about solidly play. Do you say you never early but never late? Yeah. Oh, I plan to deploy liquidity. I'm going to throw around stablecoin liquidity. I look forward to it. I mean, I'm getting 15, 16, 17, 18% on Qidao on their incentivized returns. And their incentivized returns are cranking out 40, 50, 60% on cash flow from the protocol, from debt interest payments. I mean, it's one of the most awesome cash flows in the crypto space is debt interest payments. I looked at Angle. It's basically a oh my God, what was the comparison I heard the other day? It's a VC implementation of it's a VC implementation of fixed forex. So that's really what it is, and I'm not too fond of it. I don't like VC protocols. The crypto VC and VC don't mix. That's just the bottom line. All right, I'm going to wrap it up today. I hope this helps everyone. A little macro talk, a little crypto space talk, a little bit of portfolio balance, and understanding that the risk off in crypto is some of the most interesting positions on the planet, and they're overlooked. And there's so much of a lull in the market. And it's not even just price action. We're talking about a lull in social media. It's just everyone thinks it's free money and it's easy money. And it's not about I'm in it for the technology. I'm here because the technology is freaking awesome. And I have a capacity to make money in bullish and bearish markets. It's just about getting the education out there for people to see this stuff for what it really is. It's not free money. It's about understanding how the systems work and that these systems are extreme money producers that make REITs and preferred stocks and anything that provides dividends seem pathetic in comparison. You have all these dividend investors that are like, oh, I'm generating revenue streams. I take my dividends and reinvest to get more dividends. Yeah, you're going to be somewhere in about 30 fucking years. But when you get 15% of return on your money and you're compounding the shit out of it, and the yield is denominated in a volatile, asymmetrically appreciating asset that's cranking out 100% return on its dollar denominated nominal position. Oh my God. Oh my God. I feel like I'm taking crazy pills. I just look at the crypto space in the legacy finance lens. I guess maybe I'm the only one who doesn't. Wish you all a wonderful day. Wednesday, February 16th, 12:28 p.m. Tell everybody to tongue twisted. Tell everyone to subscribe. After party on Discord. You know where it's at for the most rational community in the entire crypto space. I will see you on Friday.